New day, new lecture, and so many new marks. Welcome to SMAT. Today's agenda is a revision lecture on a chapter called Clubbing of Income. If you're at CA Inter, then this chapter is very important, guys. And this entire revision lecture, we will revise the entire chapter and then we will do an examination question to give you an idea of how they ask you the question in the exam. Guys, no matter which faculty you go to, no matter where you study tax from, but this revision lecture is going to help you understand. And of course, if you've already been my student, then you know so many of the shortcuts already. It's just good to revise it time and again so that in the exam, this happens really quickly. I hope you guys are doing well and keeping yourself safe and keeping your minds bright as the shirt that I'm wearing. Let's do this revision lecture on clubbing of income right away. As you can see, the name of the chapter is not clubbing of asset, it's clubbing of income. So guys, this income comes back to you. Clubbing basically means is added back to you. And the sections are section 60. So at the age of 60, the surgeon had a lot of incomes and he was in the highest tax bracket. So he decided to transfer certain income. So this is the surgeon, I'm going to call him Mr. S. He transferred certain incomes to his friend. Let's call him BFF. So if guys, you are transferring any income without transferring asset, the asset is still with you. Example, let's say it's an office, or example, it's some shares, but the dividend on those shares or the interest on those debentures or the rental income on their office is going to the BFF. So if you're transferring income without transferring an asset, sorry, this will come back to you, and this is called clubbing of income. So whatever asset you've transferred, see during the year when you've transferred it, after that whatever income arises to the BFF or to whoever you've transferred it to, that income will come back to you under section 60. Guys, this is to any person. This applies to any person. So whether you're an individual or a partnership firm or a company or LLP, does not matter. Section 60 applies to all of you. Next section, guys, is section 61, where you tried to transfer the income and now you got smarter. So at the age of 61, if you know our shortcuts, but for the other section 61 is easy to remember. If you've transferred now at the age of 61, you transfer not just the income, but also the asset. You transfer also the asset, but this is a revocable transfer. A revocable transfer is a transfer where you have the power to take that asset back either now or later on, or you have the power to enjoy the income either now or later on. Then that's a revocable transfer. Guys, this revocable transfer is actually like a fake transfer. Imagine on your birthday, someone gives you a gift and he can revoke it back, he can take it back for you. That's not a real gift. Why is it revocable? And hence here also, if any person transfers any asset along with the income and the asset is transferred, revocable transfer, then the income will come back to that person who's transferred it. I'm not using the word transfer or transferee because I don't enjoy this kind of language, but in the exam you can write it will come back in the hands of the transferor. Guys, section 61 also entails clubbing of income. Next is section 62. So at the age of 62, if you know the shortcut here, at the age of 62, the surgeon got smartest and he transferred the income plus he transferred the asset, and this time he did a irrevocable transfer. Irrevocable transfer basically means that you have no right to get it back, at least till certain big condition, like during the lifetime of the BFF, the asset will remain with the BFF. In that case, guys, we understand this is a genuine transfer, and if it is a genuine transfer, then the income will not, in this case there will be no clubbing provisions, thankfully, because there's an irrevocable transfer. Guys, clubbing provisions are always to be seen from the transferor's perspective. That means the one who's giving away the income or the asset. From the recipient's perspective, there can be gift taxation, but that is for IFOS and not for clubbing of income chapter. So 60, 61, and 62 are transfers of income, income plus asset, but revocable, income plus asset, irrevocable. Only in section 62, there is no clubbing of income. Next, we go to the next section, which is the easiest section, section 63. What it talks about is what is a revocable transfer. As you already know, a revocable transfer is where you can revoke it, where you can get it back either today or later on, or you can have the right to enjoy the income either now or later on. That's a revocable transfer. But guys, understand, sometimes an irrevocable transfer like this, section 62, can become a revocable, because let's say you give the asset under an agreement that this asset will be irrevocable till the lifetime of the BFF. So till your best friend is alive, the asset is his, but once he dies, the asset comes back to you. So in that case, that will be a revocable transfer then, and then after that, the income will be in your hands. So guys, all these sections apply to everyone. So whether you're a company, individual, partnership firm, 1660, 61, 62 apply to everyone. Now let's look at some specific clubbing provisions which apply only and only to specific people. So guys, let's talk about minor children first. So section 64 talks about other provisions, and in that section 64, 1A is for minor children. How do you remember 1A? Guys, for any parent, their children, especially minor children, are A1, right? A1 from day one. So that's how you'll remember section 64 1A is clubbing of minors children's income. So first you need to remember in this case, what will happen is you need to first determine the parent's income. Why shouldn't we do clubbing? No, first for clubbing, you should know which parent has higher income. So if there are two, if there is mother and there is father, calculate both their incomes, their salary income, their IFHP income, their PGBP income, their capital gains, their IFOS income, add all of them. If there are any deductions, take those deductions under those heads. And after that, but guys, no setting off, no nothing on that front, because clubbing happens before set off. Guys, C comes before S, so clubbing happens before set off. That's how we remember it. So please add all their incomes and find out who has higher income. Let's say the mother has higher income. If the mother has higher income, the clubbing will happen in the mother's hands. And if the father has higher income, the clubbing will happen in the father's hands. So the first step, guys, is to parents' income. Determine the parents' income. Once you determine the parents' income, then every income of the minor child, guys, every income, no exceptions right now, every income of the minor child. So if you have a minor child who has certain incomes, whether it's FD income, whether it's some business income, whether it's any house property income, whatever income, it will be clubbed back in the parents' hands, of course, whichever has higher income. But guys, there is an exception, of course. The exception is, the first exception is, there are exceptions and there are only two exceptions. The first exception is any skill, any intelligence, or any manual work. So if your child is in the movie called Tare Zameen Pe 2 is being made, and your child, the surgeon's child, is acting in that movie and he got 50 lakh rupees from that movie, then that is because of his skill. So that kind of income will not be added. But that 50 lakhs, guys, that 50 lakhs, when it is put in an FD, so the first level of income, guys, the first level of income is 50 lakh, that will not be clubbed. But if that 50 lakh is put in an FD and he earns FD interest, that is the second level. That's called accretion. Accretion means addition. That's the second level of income. Clubbing will apply to second level. Why? How do you understand this? You understand this because children don't have the brain to do second level of income that you have done, so it will come back to you. Next, any person who's disabled, any child who's disabled. So disability are a lot of disability, which we will see in a section called section 80U, but you don't have to by heart it. The exam will tell you that this is a disabled minor child. In that case, the income will be clubbed, will not be clubbed. So that's an exception. So skill, intelligence, manual work will not be clubbed, and disabled child will not be clubbed. Guys, for disabled child, even accretion will not be clubbed. So if the minor child, if the disabled child has certain income and he puts it in FD, even the second level. So I can say that for disabled child, there will be no clubbing ever. There will be never any clubbing in case of disabled child. For skill, intelligence, manual work, it will be first level of income will be added, second will not be added. So in the exam, if there's any minor's income, automatically take it and add it to the parent which has higher income. But please remember, you will not add any skill, intelligence, and manual work. The exam will tell you that the minor is doing a business involving skill. If the exam says a minor is doing any business only, then it will be added. If it's skill, intelligence, manual work is mentioned, then don't add it. Second level is always added, except disabled child, second level is not added. Anyway, when you add the income, guys, under section 1032, you get an exemption of maximum 1500 per child. So you can have any number of children, and each children's income, which if it's added, if the income is not added, there will be no exemption of 1500. So if per child whose income is added, you will get an exemption of 1500. Let's move ahead, guys. This is what is minor children's income. Please remember, minor children's income is under section 64 1A. Now let's move ahead to the next one. The next relationship which they've targeted, guys, the next relationship which they've targeted is spouse. So section 64.1, we're still at section 64.1. It has 2, 4, and 7. How do you remember that? To the wife, you want to transfer income of 2,47,000. If you remember my discussion, and if you're my student already, you know the shortcut. But otherwise, guys, to the wife, it's 2, 4, and 7. So you as a surgeon are transferring now certain income to your wife. So here in 64.14, guys, in section 64.14, an asset is being transferred on which the wife gets certain income. It will come back to you. It will come back to you. Section 64.14 is an asset transfer which has income generating, like shares you transferred. So the dividend will come back to you. If you transferred some debentures, the interest will come back to you. The income will come back to you. So clubbing provisions will apply in this case. In 64.17, if you transferred the asset to a third party, the asset is transferred to the third party very smartly because you want to avoid clubbing of income. So you transfer it to some partnership firm, and the income from there on, it goes to your spouse. Then in that case also, guys, the income, this is not wife only, this is spouse, so it can also be to husband, but I've given wife example, so I've taken wife, but this is to spouse. Guys, the third party, if you transfer it for the benefit of the spouse, again the income comes back to you. So 64 1 2 4 and 7 is for spouse. 4 is asset transfer on which there is income, income will come back to you. Guys, asset will not come back to you, asset will belong to your spouse, no problem, but otherwise the income will come back to you. And if it's transferred to a third party, again the income will come back to you. But guys, here there is an exception, there are two exceptions. One is if you've divorced your wife, it's agreement to live apart. If you've agreed to live apart, then in that case, if you've given some asset to that person, income will not come back. And if this for adequate consideration, if your spouse has paid you adequate consideration, then why should there be any clubbing? It is a normal sale. So in that case, these two exceptions, clubbing will not happen. And 64.1.2 is a very interesting thing where your spouse is earning certain salary. Let's say your spouse is earning certain salary from a partnership firm in which you have substantial interest at any point of time during the year. Substantial interest basically means you have 20% or more in an entity, and that entity, whether it's a partnership firm or a company or an HUF or an LLP, that entity is paying some remuneration, salary, bonus, etc. to your spouse, but which is not linked to a professional qualification. Example, your spouse is a lawyer, but you're paying her accounting fees. So that is not allowed. So if there's an entity in the middle, please remember, in which you have substantial interest basically means 20% or more. Then guys, if it's not linked to her qualifications or experience, don't argue with the exam question. If the exam question says the spouse is an engineer and you're paying her accounting fee, that means it's not linked to her qualifications. So even this case, it will come back. So in all these three cases, 2, 4 and 7, the income will come back from the spouse in your hands. Guys, only income will come back, asset will not come back. Next guys, your accretion. In spouse's case, let's also discuss accretion. Accretion basically means addition to the income. So let's say you transferred certain asset to your spouse. Of course, the income from that asset will come back to your hands. But let's say the asset is invested ahead, and from that there's some income generation, even that will come back into your hands. So even second level here will come back, as long as it's invested in a business, as long as that amount is invested in a business. But that income, if it's ahead, so example, let's say you transferred a house to your spouse, and from spouse there is some rental income. That rental income will be added into your hands. This is clubbing will apply to this one. But if that rental income is used to make an FD, if the rental income is used to make an FD, that income will not be subject to clubbing here, because your wife or your spouse has the brains to do second level of income. So the second level of income will not be added. But guys, if the house is sold, if this house is sold and an office is bought, and from that there is rental income, still it will be added, because this is just changing the form of the asset. So if the house is sold and bought another office, even rental income from the office will be added back into your hands. And 64 1 2 4 and 7 is for spouse. Next relationship which they've targeted, guys, is son's wife, not the son. If your son, not the son, son's wife, in that case it's 64 1 6 and 8. If you've been my student, you know, to the son's wife you're transferring 68,000. So 6 and 8 is to the son's wife. If to the son's wife, guys, the relationship of wife and your son and his wife should be there, it should be son's wife. In that case, if you've transferred an asset without adequate consideration, then the income will come back to you. And if you transfer it to a third party for the benefit of the son's wife, then the income will again come back to you. Asset will not come back, only income, because this is clubbing of income. So section 64 1 6 and 8, that is 68 is for son's wife, and 2 4 and 7 is for spouse. But what if you transfer some asset to your parents? No problem. What if you transfer it to your major son or major daughter? No problem. Guys, those relationships have not been questioned. Only these two relationships have been questioned: spouse and son's wife. Next, guys, is a very interesting transfer. Quickly, let's look at that transfer as well. But guys, please remember, second level of income. Second level of income is important. Second level of income in a minor child is added because they don't have the brain. Second level of income in the case of spouse is not added because they have the brains to invest in the second level of income. But if the asset is sold, let's say you transfer gold to your spouse and she sells the gold and buys a house, even the house rental income will be added because only the asset form has been changed. All right. And second last, guys, 64.2. When you transfer an asset to a spouse or to your HUF, so this is the surgeon, he's a member of an HUF and he transfers an asset to the HUF very smartly, because as you know, guys, HUF also has basic exemption limit. So let's say he transfers an asset and the income now belongs to the HUF. Sorry, it will come back to you. The income will come back to you because of clubbing provision section 64.2. And not just that, if the HUF has a partition, whether total partition, partial partition does not matter, it means the same. from HOF partition perspective. If the HOF gets partitioned and this asset gets transferred to some other member, let's say this asset gets transferred to some other member in the household, even then the income will be clubbed back. So whether it remains with the HOF or whether it remains with any member on partition, the income will come back because you transferred the asset without adequate consideration. Guys, the moment there is adequate consideration, that means it's a perfect sale. So there will be no clubbing provisions then. And last, guys, is a case of a cross transfer. What is a cross transfer? The surgeon knows that if he transfers an asset to his wife, there will be clubbing provisions. So what the surgeon does is the surgeon transfers the asset to the best friend's wife. The best friend has a wife. He transfers the asset to the best friend's wife, or he transfers the income to the best friend's wife. And same way, the best friend also transfers certain income to the surgeon's wife. Now, in this case, guys, there are interlinked transactions. So there have to be interconnected or interlinked transactions. And in that case, if there is some common amount, so let's say the surgeon transfers 6 lakhs and the BFF transfers 5 lakhs. So the amount that is common is 5 lakhs. On that 5 lakh, whatever is income happened to the surgeon's wife will be clubbed back in the hands of the surgeon. And on that 5 lakh, whatever has happened to the BFF's wife will be clubbed back in the hands of the BFF. So the individual relationship will be clubbed back in. So take the common amount, whatever income is on the common amount, take that income, because the asset is not clubbed, the income is clubbed, take that income and add it to your relationship's hands, and that is got clubbing of income. Guys, section 60, 61, 62, 63 were to applicable to everyone. 64, 2, 4 and 7 is to spouse. Section 64, 1, 6 and 8 is son's wife. 64, 2 is for HUF, and otherwise cross transfer has no specific section. Over to an exam question. Let's see how that goes. Guys, ICA has given 6 marks to a question which is on clubbing of income. I can't write it down because on this PDF I can't write, but you have to still read it with me. Guys, the question is on the screen. The B1, determine the GTI of Sri Ram Kumar and Srimati Ram Kumar. So I will call it Sri Ram Kumar is Mr. and Srimati Ram Kumar is Mrs. See how confusing they make it sound, but Mr. and Mrs. is what we will write. So salary received by Sri Ram Kumar, Mr. is 1,80,000 per annum. So you'll add 1,80,000 to Mr. But if you know salary chapter already, guys, you have a standard deduction SAP minus SEP. So SEP, there's a standard deduction of 50,000. So 1,80,000 minus 50,000, that will be in Mr.'s hand. And the Mrs. hand, she's getting a salary of 2,40,000. So 2,40,000 minus 50,000, that will be the salary in the case of Mrs.'s hands. Let's go to the next one. A Mr. transferred a flat to his wife on 1st September 2009 for adequate consideration. Guys, the word is adequate consideration. The moment there is adequate consideration means there is no clubbing. That will come in a note here. The rent received from this let out flat is 9,000 per month. Guys, 9,000 till September. So April, May, June, July, August, 5 months into 9,000 will be added in the hands of the Mr. And 9,000 into the rest of the year will be added in the hands of the Mrs. And guys, here it is IFHP. Please remember, you get a 30% flat deduction. And if you've been my student, it's an ad hoc deduction and the section is 24A, you know that. So here in these two cases, there will be no clubbing. Till now, there is no clubbing. Next, Mr. and Mrs. Are both partners in a firm. Good for them. Mr. received 36,000 and Mrs. received 64,000 as interest from the firm. Guys, if you've been my student and otherwise also, guys, you know PGBP, in that the partner, wherever he gets interest, salary, remuneration, commission, doesn't go in IFOS or salaries. It always goes in PGBP section 28(5) because 5 partners. So this 36,000 will go in the hands of Mr. and 64,000 will go in the hands of Mrs. The share of profit 12,000 and 26,000 will not be taxed because share of profit from a firm is exempt under section 10(2)(a). Till now, no clubbing has happened, guys. Let's move ahead. Mrs. transferred 10% debentures worth 3 lakh to Mr. Guys, 10% debentures transferred to Mr. The date is not given, so assuming it's transferred for the whole year, then that 10, and they've not given for adequate consideration, so we'll assume it's a gift. Assume it's inadequate consideration. So on 3 lakh at the rate of 10%, so 30,000 will be added back in the hands of Mrs. So because this is a transfer, guys, this one is going to the spouse. So 64,1,2 in that, 64,1,4 in that, the income will come back. So 30,000 will be added in the hands of the wife, that is Srimati Ram Kumar. The whole amount of 3,30,000 invested by Sri Ram Kumar in the similar investments and earned income of 39,000. Guys, now the nature has changed. While she had invested in 10% debentures, he took the whole amount. He added 30,000 of his own and he put them into other investments and earned 39,000. Be with me here. Quickly, let's understand and let's calculate this one. So what did the Mr. get? Just quickly doing the calculation here. This is the Mrs. and this is Mr. He had got investments worth 3 lakh rupees, which he changed the form. What did he buy? He bought new debentures worth 3,30,000, on which he earned income of 39,000. So if you change the form, guys, in clubbing will still happen, but will the entire 39,000 be clubbed? No, the entire 39,000 will not be clubbed, only proportionate. So 39,000 Out of 3,30,000, 3 lakh belong to the wife. If you agree, guys, out of the 3 lakh 30 of new investment, 3 lakh belong to the wife. So out of 39,000 of total income, how much belong to the wife? So if you do this cross multiplication, that is 39,000 into 3 lakh divided by 3 lakh 30, you'll get 35455. 35455. This amount will be clubbed back in the hands of the missus. I'll repeat once again. The missus gave debentures worth 3 lakh to the mister, and he bought debentures from that worth 3 lakh 30. So he put 30,000 of his own money. So that 30,000 will not be clubbed. The income on that will not be clubbed. So out of 3 lakh 30, the wife had given 3 lakh worth of investments. So out of 39,000 income, how much is of the wife? Proportionate 35,455. Let's go back to the question, guys, and let's take the last one. Mother of Sri Ram Kumar transferred a property to master with son of Sri Ram Kumar. So this basically a grandmother is giving a flat, very nice, very kind to the grandson in 2018. Now the master, who's a minor child, received 15,000 as income from this property. Guys, the minor receiving some income from a house property, minor receiving some income from the house property will be added back to the parents' hand. So first you'll calculate the parents' income. Whichever has higher income in that person's hand, you'll add this 15,000. It's not per month, so 15,000 you'll add, but of course you will give a deduction of 1,500 exemption under section 1032, and that you will get your entire 6 marks. Congratulations. Guys, 60, 61, 62 applies to everyone. 63 is a definition which is not important. Section 64, 1, 2, 4, and 7 is for spouse. Section 64, 1, 6, and 8 is for son's wife. Your children are A1, so 64, 1A is for minor children, 64, 2 is for HUF, and 60 and cross transfers, there is no specific section, but these are clubbing. Guys, again, I'm repeating, in clubbing, the first step is to check the parent who has higher income, because you will only club the minor's income in that parent's hands who has higher income. Also, the clubbing is of income and not of the asset. So forget about the asset right now. Whether there will be gift tax or not, we'll see in IFOS revision. But right now, we have to only understand that income has to be clubbed. I hope you understood this really well. This is the entire clubbing of income revision, and do this as often as you can. All the best, and see you really soon.